All right, so people really get confused when it comes to order blocks. What's the difference between an order block and supply and demand and support and resistance? So in this video, I'm going to differentiate all of them and show you the similarities and differences between all of the above.
Okay, so what we have here is US 30 on the 1-day chart. So each one of these candles is 1 day. What I would like you to do to first find areas of support and resistance, just so that it's easy visually for you to see, is to change your chart from candles to lines. This makes everything way easier. You can see the bottoms, the tops. You don't have to worry about wicks or anything. If you simply take your trend line tool and draw out these areas, you can see that this was an area where the price did not want to break through. This is an area of resistance. Once it did break through that, it came back down to test it and use it as a level of support, pushing the price up. This is the most simplistic way to determine support and resistance. Now, support and resistance levels, as you can see, don't always get respected. They break through, they come up, and they get retested later. But over time, you see that these areas continue to get respected over and over again. Now, I'm using a simple line here, but what I would like you to start doing is using areas that are zones. You can see that this zone now gives a better area of differentiation and gives you a little bit more wiggle room. So instead of just simply using a line, you can now start using zones. So instead of getting into a trade in this area, you can wait until it leaves that area with a strong rejection and have a bias of the direction of your trade, since we were able to hit an area of resistance, come down, break through, and retest it. So now switching the chart back over to candlesticks, you can see a rejection candle right here, another rejection candle right here. Once price broke through it and came down to retest it, we had a nice big rejection candle right here. And these are the areas that you want to look at. You don't want to get into trades unless you see a nice strong rejection from that area. Now, to simplify everything for you, this is why indicators exist at all. If you have trouble finding order blocks, what you can do is simply type in order blocks into the indicators tab and choose one that you like. Usually the ones that have the highest number right here are the ones that you should pick. So I just picked the first one that I saw, and now you can clearly see areas that are marked up as order blocks. These darker shaded order blocks can also be used as areas of support and resistance. They're essentially the same thing. However, if a trend is continuing, you can see these bullish order blocks being created on the way up, meaning that at these areas, when there was a slight pullback and a rejection up, there was a lot of volume in the market in these order blocks, because in an order block, there are a ton of orders, and price continued to make higher highs and higher lows. The simplest way to explain an order block is that when price pulls back, meaning that this was the high point right here, as price pulled back and broke through it again, the push of price to break through that previous high is now an area known as an order block. You can see that right here with this wick. Price came down, pushed up to break that high, order block. Price came up right here, pulled back, pushed up to break through that previous high, order block. Price came up, came down, right here, pushed up to break that high, order block. Most of the time when price comes back down to an area that is an order block, it rejects and continues up. You can see getting into entries at order blocks, if you're looking at a bullish trend and you set your entries like that with a stop loss below the order block or below a little wick or swing and target a 1 to 2, you'd be pretty safe and win a majority of your trades if you're holding on to a trade with a trend. Now, when looking at areas of supply and demand, you can either use the entire demand zone or supply zone so that when price comes down to retest this zone, you can have your entries up here. This will get you a 1 to 2 risk to reward ratio. There are 3 different types of supply and demand zones. There's range supply like this, pivot supply, which literally just uses the last candle like that, which will get you a higher risk to reward ratio, or fractal, which just uses the wick. Fractal obviously gets you the highest risk to reward. But essentially, I don't want you guys to be too confused. There are specific names for specific things. Order blocks, supply and demand, support and resistance generally are all the same thing. Yes, there are minute differences depending on who's teaching it and what they're calling it, whether it's smart money concepts or price action or ICT, but essentially it is all the same stuff. If you want a more in-depth video about supply and demand, I just posted it prior to this one, so you can go watch that video next.
Anyway, I hope you guys enjoyed this video. I hope you got some value out of it. If you'd like to see more videos like this, let me know in the comment section down below what you'd like to learn next. Thank you so much for watching, and we will see you in the next video.